All right, guys, we are here today. We got CPI inflation data coming out today. And then we also have Jerome Powell, and then we got some other stuff too. I think we got a lot of Fed speakers coming out today as well. Let me check. Yeah, we got Jerome Powell testifying, Williams speaking, Bostic speaking, Waller speaking. Again, Jerome Powell's testifying in front of Congress today. He's testifying in front of the House Service Committee. We have CPI inflation data at 8:30 tomorrow. We have PPI inflation data Friday. We have retail sales data. So we got a lot of stuff going on. A lot of stuff still down though. Like Tesla's still down on the day. SPY is down. Q is roughly flat. Bitcoin all the way down to 96 point whatever. Roughly 96.2 or so if we're looking at spot. Let's get some music playing here. Nike's still up to over 70s. AMD bounced all the way back too. It's at like 111s. So that one's been moving some. Tesla rebounding some today. Let's see if there's any news. I think we probably have some earnings. How did Supermicro Semiconductors react to earnings? Very well, it seems. Supermicro ran up in the days prior. We had the 30-year mortgage rate come out this morning as well. It showed up at 6.95%. Drop in frames? No, it doesn't look like it's. It looks like it's on your end. My end looks pretty stable at 4,500 kilobits per second, kilobits per second. So, if you're dropping frames, it's probably on you. We got about an hour and 20 minutes left. I'll put a timer up. Whew, dude. I'm trying to yawn. CPI inflation data is expected at 3%, 0.3%, I'm sorry, month over month. Release is live here at 8:30. Make this a little bit smaller. Buenos dias, mi amigo. Yeah, I don't know. Are we lagging at all, guys? I don't think we are, but I can ask. Are we lagging? Dude, a scammer almost got me today, dude. Almost got me this morning, bro. Like, almost got me. Like, okay, so what they did, and it was really smart, is they sent me an email. They shared with me a private video. And on this private video, they claimed to be YouTube. And they had some random dude. I saw the red flags immediately, but they had some like random dude being like, "Yo, being like, yo, you gotta go to this link and sign this form," or you know, something was gonna happen. I can't remember what he said. And so I'm looking at the video and I'm like, this video just doesn't seem right. And then I look at the URL for the channel and it says YouTube notifications, but notifications is spelled notification, T-O-I-N, notification, or something like that. It was just spelled wrong. And I immediately was like, wait a minute, a scammer shared a private video with me trying to see if I was dumb enough to click on it. I wasn't dumb. I clicked on the video because it was a YouTube URL that sent it to me, and so it's just a private video they shared to me. But I didn't click on the URL in the description. I'm not touching that. And now I kind of know what the scam is too. It almost got me. I wasn't actually going to click on it. I was going to double check it a couple different places. And so it wouldn't matter either way, but they almost got me. No lag. Okay. Thoughts of CPI surprising to the downside? I think if it does, the market's going to go up. Obviously, I think low inflation is going to make the market very happy if it does show it low. Yeah, I mean, there's not really any secret. It's just honestly a badly done scam that, you know, whoever the scammers were don't know how to spell notification. Ugh. There's a couple other like red flags behind it that made the whole thing nonsensical. I'm not going to get too deep into it. Like, I hide all my emails. And I also separate all my emails from like my contact email. Like, there's a lot of things that I do that make it really hard for me to get scammed. And so there's a reason I haven't yet on here, you know. Tesla rising though. Look at Tesla going up. Here's Tesla. Up to almost 330s right now. Tesla, it looks like it has some bad news, and now it's rebounding from the bad news. The NBA 30-year mortgage rate showed up. So I can pass the demo accounts every time, but once I get funded, I screw it up. Tips. It's probably the same thing that I do, Corey, which is that you're too afraid to lose the funded account, and so you trade with too much fear. Again, I'm not going to tell you that's what the problem is. That's the problem with me when I trade. Yeah, it happens though. They get sneaky with it. What's the news on Tesla here? I don't know why I keep yawning today. All right, so Benchmark initiates Tesla at a buy with a 475 price target. So I guess they think Tesla's cheap at 320 is where it is. Why did Tesla drop? Tesla fell after the EV maker closed down 6.3% yesterday. It's the stock's fifth straight session of losses. It has fallen more than 16% for Tesla over the past 5 days. CEO Elon's distractions, including his move to wrest control of OpenAI from Sam Altman, causing the drops. His involvement in running the new Doge thing, make people just pessimistic regarding the company. Again, I've said it before, I'll say it again. I like Tesla company. Elon Musk is a liability in some ways. He really is. And again, maybe this plan will work out. Like, he is rooted with the side that has power now. I just think that, you know, being too outspoken politically cannot be a good thing. On either side. I'm not even saying either side. On either side, it's not really a good thing. Are we still in a bad news is good news for the markets? I think so. But I don't think it's inflation data. I don't think inflation data falls into that category. Like, I think good news is bad news unless it's inflation data directly, right? I think if we're seeing economic reports, bad news is good news. But if it's inflation data, we go back to convention for that report, I think, personally. I might be wrong, though. Who knows? But that's what I think. I think if we show higher than expected inflation data, the market's going to go down and vice versa. Yeah, I'm against the whole realm of politics. I really am. People might hear me say certain things and think I'm on one side. I'm really not. I'm against all of it. Bureaucrats are my least favorite people. Is the easiest way to put it. And that might bother somebody. Listen, especially after like we did the monetary policy report thing yesterday. Super political. And that was an interesting chat, too. So, what do you think is going to be the Dow reaction? Please tell us your predictions. I really don't know. I have no idea what we're going to get. Meta. Palantir fell all the way down to 113. Netflix fell down to 1,000. Tesla up. Nvidia slightly green on the day. Supermicro Semiconductors up big on their earnings report. Mortgage rates went down a little bit. AMD still gapping up some. The SPY is slightly red today. Google is flat but slightly red. Palantir's down. Yeah, it was craziness yesterday. Tesla PE is astoundingly high. I don't think so right now. I don't think Tesla's PE is pretty high right now. Let me check it. But I don't think it's that bad right now, to be honest. Based off of the current price at 330s. Yeah, 73 cents, 72 cents, 52 cents, 45 cents. Let's calculate it. All right, so for Tesla, last one was 73 plus one before that was 72 plus one before that was 52. One before that was 45. All right, so the last 2 years PE ratio or EPS is 242. Is it that high? Is Tesla's PE ratio 137, or am I off with these numbers here? I never knew Tesla. I didn't think Tesla's PE ratio was this high. Is it really? Hold on, let me see. Let me back check this. Yeah, 161, dude, by other sources. Weird. Oh, there was a lot of people there saying we had like 5,000 at one point. It was kind of crazy. Yeah, I looked at Supermicro. They had good earnings, or at least good reactions to earnings. Supermicro ended up posting. Tesla's PE ratio is high. Yeah, Supermicro ended up posting. All I see is guidance numbers here. What's Supermicro's earnings? Revenue was given in a range of 5.6 to 5.7 billion, below the guidance expectations. All I see is guidance numbers for Supermicro. Where's the EPS and revenue graph of the last quarter? Bitcoin all-time high coming, maybe. Do you think short trading is morally superior to what bureaucrats do? I wouldn't really say it correlates, to be honest. I think that short trading isn't guising itself under helping people. And so short trading and trading in general is very transparent about what it is for the most part. You know, there's some sketchy short traders out there that are shorting companies, but I think if you want to market, you got to let people take both sides, you know? So like you can't be a really bad fundamental company and then get mad if people bet against it. You know what I mean? Like, I think that's silly. I'm not a big short trader. I don't really short anything. No, I might short the NASDAQ futures contract or the S&P futures contract, but I'm not really shorting any stock like that. And so I think you got to let people go both sides. You know. Yeah, let me do a poll. All right, so we got the poll going live. Do you think today's CPI inflation comes in higher or lower than the 0.3% expected number? Was it really postponed? I don't see their actual numbers. Again, I'm looking at CPI, or I'm looking at Tesla. Why is Tesla's PE ratio so low? I didn't realize it was that bad. Let me ask. Okay, yeah, so that PE ratio is correct. I got 137. That's high. Yeah, that's strange for super micro. Why is it postponed? Is my question. CPI comes out at 8:30. What's up, Pascal? Yeah, something's going on with Tesla. I think one of the banks initiated coverage on it. That I'm showing right here. I'm showing I like your honest answer. Yeah, I mean, nobody does. I'm going to guess inflation data is going to show up at like 0.4% is what my guess is. But I don't freaking know, you know, just a guess. Anyone know if Michigan prelim inflation report has guidance for CPI? No, they give the 1 year and 5 year inflation expectation. So their 1 year was 4.3%, which is way higher. That's something that tanked the markets. Yeah, I'm guessing 0.4%. I really don't know. Again, I really don't know. We're just straight up guessing. The Convertible notes have a 50% premium with up to 150%, I believe, which means big money is betting on super micro, but they might short sell it because the premium goes off today's close. Hey, what's up, Jeffrey? I think Tesla, people are asking what's going on with Tesla. Tesla, benchmark initiated Tesla at a buy rating with $475 price target is some of the news, Jeffrey. I'm pretty sure this is what's going on. Thanks for the donation, though. But I'm pretty sure this is the news that's going on right there. .7 will put us back near the peaks above 0.8% annual. Yeah, I don't think it's going to be 0.7. I think 0.7 is too high. I think 0.4%. And I don't know what that means. I'm just straight up guessing. Do not copy me. I'm not an investment professional. I'm not liable if you lose. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say here. This is for entertainment purposes only. And so always make your own assessment, trade responsibly. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. I'm not an investment professional. Oh, guys, y'all didn't tell me my charts were zoomed in all the way, dude. Damn. My charts are zoomed in way too much. Somebody's got to tell me here. I've been streaming for how long? I've been streaming for 20 minutes. Nobody's going to correct my charts and be like, yo, John, we can't see your charts, bro. Should have fixed them. There we go. There we go. We had to fix my charts. Nobody's going to tell me. Look at Tesla. I am entertained for sure. Listen, we're the top 3 most entertaining of all time. Today's just a correction. I don't know. I don't know, man. It's hard to tell. I'm going to go with a slightly higher than expected inflation bet. I think we're going to come in slightly higher than expected today. If the numbers that we got from the University of Michigan are accurate, I think that makes plausible sense. But I again, straight up guess. It could be anything. Yeah, all good. Sam, it's all good, bro. All right, guys. We got an hour and 5 minutes left until inflation data comes out. What's happening with JJ Watt? Oh, is JJ Watson getting, or JJ Watt getting into the Hall of Fame? Yeah, Michigan said 4.3%. John, do you think it's a good idea to gather information from ChatGPT and then trade based on its analysis and percentages? I mean, I think it depends on what you mean by that. like in general, the data is accurate from it, but it can also be inaccurate. Like, so usually it's accurate, but it doesn't always mean it's going to be accurate, and so you're going to have to take that context into using it, and understand it's not always going to be 100% accurate. And so I would say in general, looking at ideas, looking for stocks that are down, and then back checking. I would say the way I use like Chat GPT and AI in that regard is I look up stuff with it, gather lists with it of maybe like some discount value stocks, look for trends, patterns, like check patterns over the past few years or longer. But then I double check that information elsewhere. Once I find something I like in terms of like stocks or ideas or whatever, I double check that information somewhere else to make sure it's accurate. Because like there's variance already in trading, but there's certainly going to be variance if you're using incorrect information, and AI is pretty good, but it's not perfect in that way. Yeah, day trading makes no sense to use it. It just doesn't make sense. All right, inflation data today, guys. A big day, an important day for sure. All right, Tesla's up some, but man, Tesla was down already pretty big. I'm $173 away from losing my combine. I need good trades today. Oof, man. I mean, you already know this, but you're probably done. There's a chance. Like if I was $100 and something away, I'd be trading one micro contract, try to build a $250, $300 cushion, and then probably I would probably scale up to run one E-mini contract and swing for the fences with a $300 cushion and try to make $1,000 and get myself back into the game there. But everybody's different, Don't copy me, not an investment professional. Yeah, they got upgraded today. What's your favorite AI systems? All right, so let's talk about some of the news. So stock futures steady ahead of inflation data. The U.S. stock index futures remain relatively unchanged. Investors are awaiting January CPI report today, scheduled at 8:30 Eastern Standard Time. We're going to cover it live as soon as it drops right here. CPI is expected to show 0.3% month-over-month increase. Annual headline inflation steady at 2.9% year-over-year. Core inflation, excluding food and energy, expected to rise 0.3% as well and decrease to 3.1% year-over-year. The data could influence the Fed's interest rate decisions, and so a lot of people are going to be tuning into this today. Markets are still reacting to the tariff news. Global shares mostly rose as markets monitored the president's latest tariff measure, which included a 25% tariff on all foreign steel and aluminum entering the U.S. European indexes. Saw modest increases while Asian markets performed well. Japan's Nikkei 225 and South Korea's index both rising 0.4%. The potential impact of the tariffs has created uncertainty through past actions. Suggests these tariffs could be used as negotiation tools, specifically Dollar pauses ahead of the inflation data, so the dollar took a breather from its recent rally influenced by tariffs. As traders wait for today's CPI report, the dollar was up 0.3% against the yen, but saw modest losses against other currencies. The European Union, Mexico, and Canada condemned the 25% tariffs on steel and aluminum with potential countermeasures from the European Commission. Investors anticipate tariffs impacting the dollar and other currencies, but uncertain inflation effects make predicting future movements a little bit harder. Gold eases from record high. So if you guys have been watching the market, gold's been ripping up. Gold is now down to 2,900 or so, 2,904 at lows today. Gold prices eased after Fed Powell indicated he was in no rush to cut interest rates. Spot gold fell 0.5% to under 28.85 per ounce, down from a record high of 29.4270 reached on Tuesday amid fears of global trade war spurred by tariffs. Corporate earnings are something people are paying attention to. Palantir dropping down a little bit in pre-market, but investors are waiting for CVS, Biogen, Kraft Heinz are already out. Lyft shares dropped big following below estimate bookings, impacting Uber as well. Treasury yields are something that we're going to watch today. Also, 10-year yield has risen above 4.5%, reflecting investor concerns about inflationary pressures. Now, remember, interest rates and yields follow each other, and so if the yield rises to 4.5%, that means interest rates are probably that means the Fed's going to be more hawkish, and that's what they interpreted yesterday as a more hawkish environment for the Federal Reserve. Inflationary pressures causing some of this. They're worried about inflation. They think the Fed's going to be more hawkish than expected. In the commodities market, oil prices increased. U.S. crude and Brent both experiencing gains. Gold prices have also risen as investors seek safe haven assets. So that's one of the reasons gold has touched highs recently, is because of everybody fearing these interest rates and inflation fears. So trading CPI is not gambling. Going lower today, full margin. It's absolutely gambling. I mean, it depends on how you trade it. I would say a lot of people are going to consider it gambling regardless. But if you are buying ahead of CPI based off of what you think the CPI is, it's a straight up gamble, sir. Cheers to you. You know, do your thing. I'm not mad, but you know, you got to call it what it is. But yeah, what do you guys think? Do you guys think trading CPI is gambling? I would assume it is. But hey, who knows, man? We'll see. Maybe there is an edge. I mean, if there's anybody that says there's an edge, I've gotten literally 6 or 7 out of the last 8 CPI reports right. Anybody that watches my stream knows I've gotten them exactly right, which is honestly very strange and kind of freaked me out a little bit. And of course, haters are going to be like, oh, this dude brags too much. I haven't mentioned this in like a month. But I've gotten 6 or 7 out of the last 8 right. I have to go back and check what the actual number is. I've gotten a majority of them right over the past year, I would say, which is very odd to me, very strange. And again, with that context in mind, though, I have no freaking idea what CPI is going to show up as. I'm guessing 0.4%, slightly higher, but I have no idea. I genuinely have no idea. Don't copy me. Not an investment professional. Yeah, we got CPI. We got Powell speaking. Did you just create, is this a rap or is this a poem? Okay, here's the John poem. Somebody left this beautiful poem in chat. What a lovely, lovely poem here. It says, in a bustling market filled with dreams, stood a man, a lover of memes. With nimble fingers, swift as a breeze, I'm guessing because I type fast, he weaved through minis with practiced ease. They called him top 3 trader, wise, with keen eyes that sought the prize. Through highs and lows, he held his ground in accurate levels. If his profits were found. Hey, love it. Love it. AI is something else, man. AI is giving people these lovely poems about me. You love to see it. Yeah, it's a poem. Okay. Oh, yeah, John did it for a ridiculous run of reports. I got the last one right, too, which is very strange. I did get the last one right. The last one was the one that really freaked me out, though, because I actually got it right again, which is very strange to me. Last time we showed up at 0.4%. I guessed 0.4% last time. No, I got the year over year right last time at 2.9% is what I got. I got it at 2.9%. I'm going to go at 3% this time. I'm going to guess 3% and then 0.4%. Again, tech crash, Powell. Investors spend too little time thinking about risks. Mag 7 stocks now have to make up 33% of the S&P market by market cap. Wait, what? The Mag 7 stocks now make up 33% of the S&P by market cap, with valuations already high. A return to the long-term price to earnings average alone, PE, would mean a 30% sell-off, says a team of strategists led by Victor Hort. They said, quote, "We think disappointments in generative AI monetization, efficiency improvements, or a top-line slowdown could trigger a sell-off in equities. Our economic team simulation suggests that a large equity correction via the wealth effect could spark a recession," end quote. Again, this is... Yeah, they're talking about all kind of stuff. Here's the thing, though, right? So, okay. I'm going to argue against my CPI thesis. All right, hey, Jeffrey, my guy, with Tesla shorted, could reversal cause a squeeze? Yeah, I mean, it could. We don't know if it's going to. You have to check the short data, but I don't think... I mean, some shorters, I'm sure, are attacking Tesla. But I don't know if... I guess Tesla probably is one of the more shorted stocks out there. It could certainly cause a squeeze. Tesla, you know, the difference, though, is that there's a difference between, like, Tesla and, like, GameStop. GameStop had this parabolic squeeze because it had 120% short float. Tiny float as well. So tiny float mixed with a huge short float contributed to one of the biggest short squeezes in history. You know, Tesla's float, on the other hand, like, GameStop had a float of like 50 million, which is very small float. Tesla has a float of almost 3 billion. It's just a different thing. So we might see some short squeeze from this, but it's not going to be like a GameStop-esque one. It's just not. Most likely. I mean, I don't freaking know. Anything could happen. We'll have to wait and see. But yeah, we'll have to wait. What was I doing before I talked about Teslas? Oh yeah, here's an argument against my thesis on CPI. All right, so sometimes the CPI rate tends to follow what they want it to be. All right, now if the Fed's getting pressure to cut, what could signal less of a need to cut? Or less, what could signal less inflation fears and more justification in a cut? Lower inflation data could, right? And so while I think if everything goes in as it should, it would be higher, slightly higher, especially considering the Michigan inflation expectations. But I also think, like, I think there's some pressure to cut rates, and in that regard, there's some pressure to have low inflation data as well. So I think, I don't know. This is just a guess, but I think Powell is getting pressure to cut rates now. And I think the only way we're going to cut rates is if inflation data comes in good. And so I'm thinking either as expected or better than expected is what they need to justify rate cuts. But outside of that, I'm guessing high. And so I guess I'll stick with my original guess, but I'm not super confident about this one. I'm going to go with 0.4%. Month over month, 3% year over year is what I'm going to guess. But again, it's just a straight up guess. I don't know. Do we have the Michigan report again today? Do we? No. Yeah, so we don't have the Michigan report today. We had the Michigan report last Friday. This Friday we have... Yeah, we don't have it again, so we don't get the Michigan report until next, I don't know how long, a couple weeks. Yeah, Friday's data tanked the markets for sure. It was a big, brutal, like nasty, nasty drop in markets. Yeah, I don't know what Tesla's going to do. I really don't. I think FSD is going to be Tesla's big money maker long term, well over what they earn producing vehicles. And so it depends on what the status of FSD is, full FSD in a year and a half, to try to predict what they're going to be like in 18 months. I think it depends on the status of FSD. I think that's their future moneymaker, and that's going to dictate how well they do as well. I think there's a better chance it will come in at 0.3%. You might be right. Honestly, I could see 0.3% being because I think 0.3% is the Goldilocks spot where it's not high to make people panic. It's not low to like really push for rate cuts. It's somewhere in the middle, and then maybe, you know. Yeah, but Harris, it's kind of like a damned if you do, damned if you don't scenario, you know. So like, if the labor market's strong and it causes inflation to be high, can we really critique that economy? Because inflation was high, and inflation being high is not an economic critique, I guess is what we're saying. Not most of the time. Now, some people would argue this is extenuating circumstances, but inflation being high, I don't know if that's necessarily an economic critique. I think that's a consequence of a strong labor market and economy in some ways. So, you know, I think people that want to criticize are going to find ways to criticize it. And it's all love, but like I think people that want to criticize the economy are going to find ways. If the economy's been strong and we get inflation from it, they're going to critique that and say the economy's in shambles. If the economy's weak, they try to combat inflation by maintaining high interest rates and pushing it down. They're going to complain about the weak economy, low GDP numbers, you know, a high unemployment, so forth and so on. And so I think it's no matter what you do, people are going to be upset, and they're going to pick the one that they can to critique the market and the economy. But yeah. What's up, Z? Thanks so much, man. Appreciate it. Tesla and SpaceX should merge. All right, Q up to 528.80s. SPY bouncing back a little bit. So we are seeing some strength here. A lot of this is driven by Tesla this morning. Tesla up to 335s, almost 340s, bouncing back some here. A lot of tech is too. AMD's up, Supermicro. Even though I thought Supermicro was kind of sketchy, not putting out their actual numbers and delaying it until later this month. Yes, James. High CPI should be good for the dollar, the Dixie. Yeah. Supermicro's up, but they delayed their actual EPS and revenue. They put guidance numbers out for some reason, but they didn't post their actual EPS and revenue, which I thought is very strange. No? Y'all don't find that strange? I'm surprised I'm surprised Supermicro is even like up from this report. I would think that, I mean, the guidance numbers were good, but I would assume the market understands a company that has historically had issues with their books, you know, not having their earnings scheduled on time and put out on time is a little off-putting. No? Like, I'm surprised they're up, to be honest. I really am. And again, I'm not saying they're weak. I don't freaking know. But I think it's strange. The company that has historically struggled with their books not having their earnings on time should be a huge red flag, no? But what do I know, man? Yeah, Supermicro might run like Palantir. I don't freaking know. I'm not a hater. I'm not against it. I'm just surprised it's not down from this. SPY at 605's almost green. Earnings. Google's flat today. But I mean, you got to understand, like, Google's long-term chart's very strong. You know, here's Google. It's down from earnings, sure. But here's a weekly chart. And so, like, it pulling back from lifetime highs, it's not a shock. It was, you know, that's the normal flow of things. Like, people are mad at Google for pulling back this much from all-time highs right here. You know? But, like, this is the trend since 2023. It's literally basically gone straight up. And every time it's dipped big, it's gotten bought back up. So, yeah. Yeah, I mean, I don't know. Laced up souls. I don't know, bro. Maybe. Again, I'm not saying there is. I'm just saying I would assume that would make people nervous. But maybe they're solid. I really don't know. All right, so we did do our X post, guys. We did do our X post live. Every day we give you guys a breakdown of all the biggest news stories in the market. Here is our post, our latest post. Give me a follow on X, guys. We're growing our X profile. Hey, you know, I appreciate the donation. Thanks so much. I really don't know. There's the link in chat right now. Red flag, yes, it had more than... Yeah, I mean, I agree. I think it's strange that a company that has historically had problems with their books not being able to post their quarterly earnings, only putting out guidance numbers and delaying their actual earnings release is a little strange. But maybe, again, maybe they said good enough things in the earnings call to justify the increase. I'm not sure. You know, I really don't know there. We'll see. I think Michigan was more of an emotional fear of the new presidency. Yeah, I mean, that might be true. I mean, sure, that might be true. I appreciate the donations. Genuinely appreciate it. But no, you might be right. Yeah, I think we're going to post 2 news stories today, too, dropping the CPI data, too. All right. Again, I almost fell for a scam this morning, dude. I genuinely almost did. I caught it. I didn't fall for it. But, man, they almost got me. Looking at our poll numbers here, 50% think higher, 50% think lower. Huh. Yeah, and the way I almost got by this is that they sent me a message. I saw it when I first woke up this morning. YouTube sent me the message. They said, hey, a private video has been shared to you. And so I'm thinking YouTube sent me a video, and when I click on the private video, it says, oh, yeah, guys, you got to sign this form or your account is, you know. And so I'm sitting there looking at it, but there's just a lot of red flags. And pretty quickly I realized, like, hey, this is a scammer that's shared a private video with me pretending to be YouTube. Like, you know what I mean? They're going to try to catch me that way. And luckily I didn't click on any of the links or anything like that. And I recognized some misspelling and just a lot of problems with what they sent me. So. What do y'all think of this song? It's a little bit too, it's like Rob Zombie-esque. Is it too much? See what the chat says. Aquafina? No. They basically completed their investigation and set a date that they will have it filed by. So just the sole fact of not being delisted. The company is way undervalued. Market cap just 1.5x. Yeah, they almost got me. Too much like rave music? Yeah. A little bit too much. Sounds like Rob Zombie in my... Yeah, if the scammers could do other stuff, it makes so much more money. You know? I don't think this song's much better, but it's not as hyped as the other song. Intel, where's Intel at? Has Intel started to bounce back yet? Intel, I mean, objectively, it looks cheap, but I thought it was cheap at like 30, and it's still down pretty big percentages from there. It's at 22s now. It's starting to ride back up some on Intel. Earnings this morning that we had today so far. We had Vertiv, CVS, Kraft Heinz, Biogen. I think that's basically all the big ones. We got Robinhood and Reddit this evening. Dutch Bros, Trade Desk, Cisco this evening too. So we got some big ones this evening. Man, dude, sorry for ADHD kicking in, but sheesh, but reading some horrible stuff on the internet, man. Yeah, I mean, I don't know if Tesla's gonna make big moves from this or not. Yeah, I really don't know if Tesla is gonna make big moves or not. Yeah, so again, we're looking at Intel here. We're looking at the Q. We still got 30 plus minutes left. Got well over 1,000 people here already, guys. So I appreciate the love. Thanks for tuning into my channel. In the shadows they would lurk. Oh, more poems. Huh? Unemployment rate goes higher, CPI goes up. Yeah, for sure. Index starting to move a little bit. Yeah, see them all going up some in anticipation of this. Are you a dualist, idealist, or a materialist? I wouldn't really say I'm any of those. Like I would probably say I'm a dualist. where I think the mind and the body are two different things. Maybe a little bit of idealism thrown in there, but like I could go with either. I'm definitely not a materialist in that, like, I think there's other things besides the physical realm, but I don't know. I don't freaking know person. Oh, you're a defense. You're a spy, Aaron George? Of course you are. This is the internet. You know? I'm a wealthy billionaire that also at nighttime dresses up like a bat in a fancy car and has all these fancy tools that I use to fight crime regularly. But don't tell anybody because it's classified. My guy is a psychonaut too? No, I'm not. Yeah, I'm certainly not. I don't have time to do all that crazy stuff, bro. I got kids and a family and stuff, dude. I usually sit at home and try to think of business ideas and run businesses from home, hang out with the family, train jiu-jitsu sometimes, go to the gym, when I can. I don't have time to do all that crazy young people stuff, bro. I'm too old. His tools are stronger than J. Yeah, I guess so. Yeah, people ask me funny questions. It's okay. All right, guys. So we're at 6:05. Yeah, I'm not gonna go into any Yeah. Again, we got CPI at 8:30 Eastern Standard Time. We got Jerome Powell's semi-annual monetary policy report to Congress, specifically with the House today. The House testimony is today. Yeah. Sorry for being skeptical of people on the internet. People claim to be so much different stuff. They'll be like, yeah, I'm a brand new trader. Your content helped me so much. The next week, they're like, hey, bro, I make $50K a week trading. I've been trading for 30 years, bro. Buy my course now. Okay. Got it. All right, guys. So I would say probably like 3 to 4 times a week. Scruff. 3 to 4 times a week. What do you guys think inflation data is going to show up as? We got 30 minutes left. I'm going to go with, again, 0.4%. 3% on the year. Do you see they move in the markets? What? Yeah, the Federal Reserve is going to be doing their semi-annual monetary policy report. At least Jerome Powell is going to be doing something called the semi-annual monetary policy report to Congress. This is basically where he gets grilled by Congress for a few hours. But he does speak on the economy, on problems, on stuff like that. The representatives end up, grilling him on different things. It happens twice a year. Today's is the first one. The next one will be sometime later in April, probably. But yeah. As expected, maybe. In line with previous. I think that's that makes sense. I guess I gotta change my X handle to YouTube 150K plus now. What? How do I? I don't know what to do here. If I go to edit profile, it immediately says my description is too big. My bio is too big. All right, there we go. I don't see anything over 0.4% happening. Yeah, I don't think we're going to go over 0.4%. I think that's too high. I think they want to be more balanced than that, personally. Yeah, we got 25 minutes, chat. 25 minutes. Yeah, I'm not really sure. Somebody's talking about Topstep's letter. I don't really see anything too bad here. What I see in the letter is that they're saying some traders are kind of breaking the rules, and over the next 4 months that they're going to ban some of those traders. And my guess is that some of them are public figures, and so you might hear some nonsense from them. But overall, it's less than 1% of traders, and like they're just kind of like manipulating the system is what it sounds like to me. But you know, we'll see. That's my guess. Is like some of these traders are kind of breaking rules. They're gonna ban them, and some of them might be public figures on the internet, and so they're gonna cry about it, but they'll be all right. They ain't gonna cut rates. I agree. I don't think they're gonna cut rates anytime soon. I don't think we should. And again, president's demanding rate cuts. I just don't think it's that easy. President. The issue is that he's critiquing inflation, but then demanding rate cuts. And so at this point in time, a pause is very probable. Again, we got 95 to 5% likelihood of a rate pause here. So 95 to 5% likelihood of a rate pause. So we'll see what happens. And again, inflation data is very relevant today. Let's talk about it. So the Federal Reserve influences interest rates. The rates that they are influencing are called the federal funds rate. They're short-term interest rates that banks use to lend money overnight and charge each other to lend money overnight. Eventually, though, these rates trickle into everything else, right? So by lowering short-term federal funds rate, which is the rates that the Fed changes, it lowers rates around the country. Specifically, it directly impacts like adjustable rate mortgages, home equity lines of credit, short-term loans, stuff like that. But eventually, it will also indirectly affect like mortgages and other stuff, although longer-term mortgages are a little bit harder to move. But there's a consequence to a overly aggressive Fed in terms of rate cuts, like a Fed that pushes rate cuts too early. If the Fed does something called quantitative easing, which is injecting liquidity into markets through money printing, basically, they buy up a bunch of bonds using online. They print online money and then buy up bonds with it is what quantitative easing is. The consequence is inflation. And so when the economy looks really weak and the Fed's trying to save us from like a disaster like 2020, sometimes they'll do QE and the consequence is inflation. If you look after 2020, inflation spiked up to over 10 or over 9% in a lot of places. And that's really why most people are unhappy right now. In terms of the economy, most people are unhappy because of that inflation that we faced. It's not because of economic weakness, which is why I find it funny when people are complaining about inflation yet pushing for rate cuts. It's like complaining about a fire but pushing gas. It just doesn't make sense. And so what the Fed's currently doing and what they spoke about yesterday is they're still doing what's called quantitative tightening, which is the opposite of QE. If QE is injecting liquidity, quantitative tightening is taking away liquidity by letting their balance sheet reduce. over time. They're letting their current bond holdings mature is what this is. And this takes liquidity away and is overall a hawkish, kind of hedging, like a hawkish stance by the Fed. And they're still doing it. They're still doing QT. Now, one of the things that will make the Fed even less likely to cut interest rates is high inflation. So if inflation comes in really, really high, the Fed's even less likely to cut interest rates. And the current dynamic of markets is that the market wants lower rates. The market wants lower rates right now. And so the current dynamic of things is that the market's pushing for lower rates. If we get higher than expected inflation data, it's less likely that we're going to cut rates, and it's more justifiable to pause or to have a continued what's called pause, which means they're not changing rates at all. That's what's expected for the next meeting in March, is that they're not going to change rates at all. They're going to pause most likely. But again, with all that context in mind, right, the president is pushing for rate cuts. He's demanding rate cuts. But the problem is that they're not that easy to, like, we can't just cut rates to pander to people, because then inflation could potentially get worse. And that's a problem. Like, that's something that you want to be weary of and understand. Like, that's an issue. Like, cutting rates too early, leaving them there is a problem. And people tend to complain a lot about the economy. But the consequence of a strong economy is inflation. And so it's kind of like a damned if you do, damned if you don't scenario. If we don't lower interest rates and keep rates high, people complain about that. If we do cut rates and inject liquidity into markets, people complain about inflation. And so it's, regardless of what happens, people are going to be upset about it. I think I've said this before, I'm under the logic of I'd rather see economic weakness by maintaining high interest rates than inflation problems. Inflation problems should be in everybody's mind because of how much inflation we've seen in the last 5 years. And so I'm nervous about inflation. I don't want to see inflation higher. And to be honest, I made the prediction of 0.4% today and 3% on the year. But I also think that if the Fed is getting pressure to cut rates, it might go the other way. And so I'm not confident about today's CPI report. I usually get them right, but I'm not really confident about this one, just because, again, I think they're getting pressure to cut rates. And if they're getting pressure to cut rates, what economic report justifies rate cuts? Low inflation does. And so my point is, if we come in low for inflation today, I'm not going to be shocked. But I'm still going to keep my 0.4 slightly higher than expected inflation expectations, specifically because of the Michigan data that showed up on Friday. But who freaking knows, man? I don't really think there's much of an edge in guessing. All right, I'm checking back up on the chat. I'm sure we're going to have some agreements and disagreements with everything I just said. If Fed drops rates, doesn't that just make other countries less likely to buy our bonds, and we need them to otherwise? Yeah, I mean, true, Aaron, but it's not something that we can always use that as like a justification not to drop rates, right? Like, I think people are unhappy for a lot of reasons. The mortgage industry is freaking people out. The real estate market has been rough for 4 or 5 years now. Part of the problem is inflation, though. I mean, part of it is obviously high rates, right? When interest rates are high, everything costs a little bit more, including housing. But it's also inflation problems as well. Like, when landlords have higher costs, they bump it up to the renters. You know what I mean? So it's a nuanced thing that's not as easy to control as a lot of people think it is. And again, I'm not against the president. Like, I'm very neutral, but I don't think it's as easy as demanding low rates. And again, I'm fearing inflation. And inflation doesn't always directly cause, or low interest rates don't always directly cause inflation. They get really bad when we have, like, in 2020, it was really bad because we had stimulus checks, and then we also had quantitative easing. Which are kind of the same thing, but all of that economic stimulus caused inflation. We also had supply chain restraints because of everything going on in 2020, and so that contributed to high inflation. So it's not as easy as being like, hey, inflation was because of all this stuff. And so I guess what I'm saying is we could probably lower rates and be okay with it, but just as a precautionary measure, I would rather us have a hawkish Fed and not jump to cutting rates too early, if that makes sense, But I'm sure Powell's also got to worry about his job. Now, technically, the Federal Reserve and the government are independent entities of each other, but the president also fired somebody that had the same protections as Powell not that long ago. So, to put it into perspective, in January, he fired a member of the National Labor Relations Board, which had similar protections to the Fed. So we'll have to wait and see. And so my overarching point here is I think Powell's probably getting some pressure to cut. It doesn't mean we're going to cut, but I'm curious to see what today's inflation report shows. I genuinely am, because I think it could go either way. And I'm curious. We got over 15 minutes left, chat. Has anybody ever told you have a good jawline? I mean, top 3 ever. Powell mentioned crypto banking and senators. Yeah. Yeah, I mean, let's not get too political, Jarrett. I don't. The last thing I want to do is spark some political argument here, bro. I'm very neutral as well. It's not like I'm even rooting for any side. We certainly wouldn't have it if we're still in the gold standard. In fact, even if we still had silver in our coins, we probably wouldn't have nearly as bad of problems. Hey, let's all be respectful in chat, you guys. Well, this is just random. So, like, you see this big thing, and you might be like, oh, no. This happens at 8 a.m. It's called the 8 a.m. scrum. What happens is orders from overnight get filled, and sometimes you get, like, a rogue order that gets filled down there. Whoa. Get your mind out the gutter, guys. Get your mind out the gutter. Sometimes you get a rogue order getting filled right here. And that's why you see this big candle. But it's not reflective of true price. If that makes sense. All right, guys. Hey, 15 minutes. Yeah, the Federal Reserve's not a government entity, technically. Now, it works with them a lot. Whatever data. Yeah, I'm curious to see what kind of markets we get today on the inflation data. Just because today's report is incredibly relevant to everything going on, man. Like, super, super relevant to everything happening right now. And so it's something you want to pay attention to today is the point. Like, today's inflation report, very relevant to everything. Super Micro's still ripping up here, guys. And again, Super Micro posted good guidance, but they delayed the report of their normal EPS and revenue. And so, again, interesting for a company that's had book problems and accounting problems to delay their earnings another couple weeks. I'm surprised they're moving up on this, but, I think their earnings call was good. We had some good positive things said during the earnings call, so people are still optimistic regarding Supermicro Semiconductors, but interesting nonetheless. Let's push it up. It's at 44s now, chat, 44s. Have you done your prediction yet? Again, I'm not super confident about my prediction this month. I know I've gotten like a lot of the CPI reports right. But again, I'm kind of mixed here. I think if we were looking at pure expectational logic, I think it would be at like slightly higher at like 0.4%. I think if we're looking at the logic of the pressure that they're getting to cut rates, I think it makes sense to go lower than expected today. And so I'm very neutral. My guess is 0.4%, 3% year over year. But I have no freaking idea. And this is one of the CPI reports I'm the least confident in terms of my prediction, because I think both sides makes sense, makes logical sense, I think. So I'm going to tell you guys, take everything I say today with a grain of salt regarding inflation predictions, because I have no freaking idea. Not an investment professional. Not liable if you lose. Always make your own assessment. I have no freaking idea what I'm talking about. Sometimes I trade off stream, and sometimes I lose off stream. You're not going to see it. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Yeah, it's a really interesting report today for sure. Very interesting. We'll see. I'm ready. Look at Supermicro going up. Tesla's up a lot today too. Tesla's now kind of dipping down after flagging a little bit here. John, have you had any stands blaming you for their losses? Not recently, because I'm pretty protected there. I always tell people I have no idea what's going to happen here. Not an investment professional. Don't copy me. And so, I've had some weirdos that kind of get weird. I've had some obsessive people here too that are very strange and kind of off-putting. And, you know they're just kind of creating a bunch of accounts getting weird. Most of the time, the people that get weird are like people who have tried to make YouTube channels themselves and failed at it, and so they blame me for all their problems and everything that goes on. It's just unhealthy, to be honest, but people are weird. You get enough people on the internet, you're gonna have a couple weird people that just kind of poke out, so it's normal. Yeah, tuition's a good way to call it for sure. NFP was lower, so CPI shouldn't be too high. Sure. Will the wildfires affect CPI? Maybe. What do you think of PayPal? I think PayPal's a little high right now, to be honest, personally. Actually, no, never mind. PayPal ended up dipping down the last couple of days. They must have dropped from earnings. I thought they were high in the 90s. I just now saw they dropped all the way down there at 75, 76s right now. So, I don't here they seem okay, but I don't know. I'll have to look at the PE ratio and stuff. Yeah, it's definitely Steve's fault. All right, guys, we got less than 10 minutes now. Less than 10 minutes. You guys ready? Again, last minute predictions, higher or lower, chat. Last minute predictions, higher or lower. What do you guys think? Nine minutes. Again, we get people tuning in because we cover it quickly. Higher or lower? Again, we did have mortgage data showed up slightly lower than expected at 6.95% today. 6.95%. So mortgage data did come in better than expected. Better than expected. Still got about 9 minutes left, chat. Lower, higher, lower, lower. As expected, lower, flat. Yeah, I'm not very confident about mine today because I think all of it makes sense. I think lower makes sense in the context of lower payrolls last week. Also, the pressure the Fed's getting to cut rates. Lower means more probable that we're going to cut rates. And so I think that makes sense. I think as expected makes sense because it's kind of the Goldilocks neutral spot. And I think my prediction of 0.4% also makes sense because of the worse than expected Michigan consumer sentiment data. Much worse than expected consumer sentiment data. Yeah. And I think it all makes sense, but we'll see. Papa Pow. Yeah, don't do it, Don. Don't do it, bro. Again, this is a gamble. Taking a big position now ahead of this is a gamble. We still got about 8 minutes left. 8 minutes. Make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. Every time I do a CPI report, somebody's like, oh, bro, CPI came out 5 minutes ago, bro. What happened? This dude just doesn't even cover it on time. Hit the live button. Make sure you're not delayed on stream, guys. All right. What's your favorite stock to buy today? Let me know. Higher? Looking at our poll number, 53% think higher than expected, over 2,000 votes. 53% think higher. 47% think lower. Here we go, guys. 7 minutes. 7 minutes left. In line. Tariffs didn't kick in yet. Yeah. Thinking about buying the Tesla dip. I think in line makes sense. Again, I really don't know. Yeah, make sure you're live, guys. Where's gold at right now? What do you think this is going to do to gold? Gold all the way down to 2900s right now, basically. All right, guys, 6 minutes left. 6 minutes. Subscribe, hit the notification bell. We got about 3,000 viewers right now. Let's see what we get. It's time. Okay, we got about 6 minutes left. 6 minutes. All right, guys. So, yeah, we got a couple minutes left. Real estate sector. Questions for chat. Higher inflation data. What's bearish? Higher is bearish. But, I don't know. Please don't make any trades based off of what I think here, because I genuinely have no idea. We got 5 minutes left, chat. 5 minutes. Timer's pretty accurate. It's a little bit early, but it's pretty accurate. Bullish. Stock crash. Remember, we got Jerome Powell later on this morning, too. So we got Big Papa Jerome Powell coming out later this morning as well. Just be ready, guys. Be ready. We got 3,000 viewers here. Let's see if we can break 4 for this stream. Yeah, I don't even know what advice is. Yeah, the president did say interest rates should be lower, and I think, you know, as much as they're independent entities, I think, yeah, no, you need a shirt, bro. Here, hold on, buddy. All right, come here. I muted it. They can't see you. I hit it, bro. Come here. Love you, dude. Have a good day at school, buddy. Have a great day, man. All right. All right, love you. Have a good day. All right, guys, sorry. We got 4 minutes left. 4 minutes. Needs to be higher. People hedging, most likely. All right, we have 4 minutes left here. 4 minutes. Again, core CPI expected at 0.3%. Regular CPI expected at 0.3%. Year over year expected at 2.9%. Core CPI year over year expected at 3.1%. 3.1%. Are you guys ready? Looking at our poll one last time here. 53% think higher than expected. 47% think lower. I'm guessing slightly higher. But I don't know. I think lower also makes sense if the Fed's pushing for lower rates. You know, so if we come in lower, it's more probable that we're going to cut next month. I'm not going to say it's probable, but it's more probable that we cut next month if we come in lower than expected for inflation. If we come in higher than expected, it's more probable that we're going to take a neutral rate decision much more than we have so far. So we'll see. Powell speaks at 10 a.m. We're going to stream it live like we always do. All right, guys, we got 2 minutes left. 2 minutes left. I mean, I hope it's low, and I hope I'm wrong. I really do. But it doesn't matter. I'm guessing 0.4%, slightly higher. 3% on the year. But who knows? Yeah, I might be wrong, though. This is one that I'm the least confident in over the last few, just because I think a lot of different things make sense. And so I don't think it's easy to predict this one specifically. Yeah, core, which excludes food and energy, is important. Again, guys, hit the live button next to the play button. Make sure you're fully caught up on stream. We got a minute and a half left. I'm going to put gold up here. Here's the NASDAQ and the SPY right here, chat. NASDAQ, SPY, gold, all up on the charts. We got about a minute left, a little bit over a minute. Here we go. Let's get ready. 1 minute, chat. A little bit over a minute, but remember, guys, hit the live button next to the play button. Make sure you're fully caught up on stream here. Live button next to the play button. Make sure you're fully caught up on stream, chat. It's important. Do it now. Hit the live button next to the play button. All right, here we go. Less than a minute, effectively. Less than a minute. I'm gonna mute this this timer. We got about 50 seconds left. 50 seconds left. All right, here's the NASDAQ. I'm going to put the futures contract, the NQ, up. I think it's better liquidity, easier to read. We'll leave the SPY up here just because. Yeah, we got gold up on the left side here. All right, guys, here we go. 30 seconds. 30 seconds. CPI is higher. All right, guys, 15 seconds. 15, 10 seconds, 9, 8, 7, 6, 5, 4, 3, 2, 1. Here we go, guys. Here's the inflation data. All right, CPI showed up at 3% year over year, 0.5% month to month, higher than expected. Higher than expected, 3% year over year, as I said. Higher than expected at 0.5% month over month, and the market does not like it. I thought higher, and it made sense, and so we were higher. I missed the month to month, but I was correct about the year over year reading. I think I'm more accurate with the year over year. I think I was right about last time's year over year expected too. But again, NASDAQ dumping down, gold dumping down, SPY dumping down, worse than expected inflation data, higher than expected everywhere here. Everywhere, higher than expected CPI, higher than expected core CPI. Yeah, higher than expected. Core CPI showed up at 0.4%. Regular year-over-year CPI showed up at 3%. So, right again, at least for one of them, in the year-over-year one. I was wrong on the month-over-month one. We showed up higher than expected at 0.5%, guys. 0.5%. Maybe there is an edge in predicting inflation data. But again, year-over-year, we showed up at 3%. Wow. 3%, guys. That's high. Again, this is high. We got Powell speaking today as well. Yeah, this is high. This is worse than expected. 3% on the year. 0.5% on the month. That's high. Not a shock, though, because, again, we thought we would come in higher than expected. Even though I wasn't super confident about it, but I guess when you're right, you're right. Yeah, 0.5% is way too high, guys. That's kind of a scary number. Yeah, a couple people said 0.5. Nice job. I said 3% year over year. And so I'm gonna celebrate that being right again. But man, chat, worse than expected inflation data. Everything's down. And I think the market kind of needs to correct. I've told you guys for months now. I haven't been interested in buying up stuff. I think the market might correct sometime this year. We'll see what happens. Gold is bouncing back up, but the NASDAQ's dumping. SPY dumping down here, chat. Big drops. What's weird is that I've been right about the direction, like whether we come in higher or lower than the expected number almost every single time, which is very strange, but I guess there is some type of edge in predicting it. You just got to follow the economy, to be honest. All right, guys, NASDAQ all the way down to 21.55s. SPY down under 600s here. Also, guys, if you haven't already, check out Topstep. If you want to day trade with me, try Topstep's funded account program. I made hundreds yesterday. No PDT rule in futures. So if you want to get around the PDT rule, try Topstep futures. Topstep gives you a demo, Base one's a 50K demo. If you can make 3K in profit on said 50K demo without losing 2K first, following their rules, they fund you 50K with a 90% split, and you get to keep your first 10K, which is very similar to funding your own account. But if you lose, the base one's $49 a month. It teaches you how to trade. It's a beautiful middle ground of pressure where you're learning how to trade. If you're good enough to pass it, you can get started for $50. Get to a point where you're taking withdrawals and fund your own account, and if you fail, you're out $50. It's not the end of the world, and I think that's a great way to learn how to day trade. They're the most legit one in the world. They paid out over 150 million, almost 200 million in the last 4 years. They fund thousands of traders. They've been around for over 12 years, and if you use my link and go to Topstep X as the platform, you get zero commission as well. Zero commission on Topstep X. We did great yesterday in our trading here. I'll put this up on screen. I hate Windows 11. We did great yesterday on our trading. I'll put this up on screen. Look at my trades yesterday. Pretty solid. Oh, I'm blocking them, guys. Let me get myself out of the way here. Look at my trades right here. We did pretty good. Better than expected than for John at beginner trading. But again, look at this big dip in the NASDAQ here, guys. Big drop in the NQ. We're going to get ready to trade. And, yeah, let's do this. Are you guys up or down this week trading futures? Or trading in general, I should say. But man, guys, markets are down big on this shocking CPI report, much higher than expected. 3% on the year, 0.5% month to month, way higher than even I thought. But if you want to check out Topstep, again, a great way to learn how to day trade in the futures market. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stock patterns. I'll put the link up in chat. They're an affiliate of mine. I am biased. I get paid by them. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly. And, yeah. And you said rate cuts next month? No, I did not. I didn't say rate cuts next month. I said if the data came in lower than expected, it's more probable that we're going to get rate cuts next month. But that it wasn't probable, it was just more probable is verbatim what I said. And that was as if the market showed lower than expected CPI inflation data, which it did not. It showed higher than expected inflation data, which means it's less likely for us to cut rates. And we're already at 95% likelihood of a pause next month. That number is going to go up dramatically now. I think it's going to be 99-1 or worse. In terms of rate cuts. And the market obviously did not like this. Gold's down, NASDAQ's down, SPY is down. Yeah, I mean, you know, you could say whatever you want and make up stuff trying to troll, and that's okay. But everybody in the chat knows I didn't say we were going to cut next month. That would be dumb. We're not going to cut next month. All right, guys, so look, we were going to end this inflation poll. We got almost 4,000 votes here, 4,000 votes. All right, guys, we're going to do a question. Does inflation get better or worse over the next 3 months? We did this poll yesterday. Better or worse over the next 3 months, guys? What do you guys think? Again, inflation dragging the market down here. Look at this drop. Brutal drop, guys. Stick around. We are going to trade. Vote on the poll right now. Yeah, I mean, that's what I'm saying. It's not as easy to push for a rate cut. And again, rate cuts mean inflation's going to get worse, not better. So, vote on the poll. What do you guys think? He got it right with a little hesitation. I did honestly get it right again. I got the year over year right again. I said 3%. We showed 3%. And again, this might spark a correction. It depends on what Powell says today, but this might spark a correction. We also have PPI inflation data tomorrow, the other side of this coin. So just be careful, guys. Be careful. Yeah, PCE is the much more important one. I think we have PCE. I don't think it's next week, but the week after. For PCE inflation data. Yeah, vote on the poll. We got the poll live regarding inflation over the next 3 months. 62% think worse. 38% think better. Yeah, tariffs probably influencing this. Again, I wasn't super confident in my prediction, but I did get the year over year right, and I said we would be higher than expected, or at least I thought we would be. I think that made logical sense. I thought both ways made logical sense. Pressure from the Fed means that they want it to be lower, but I guess that kind of shows just because they want it to be lower doesn't necessarily mean it's going to be. It also means, again, the Fed's less likely to cut with this inflation data. Oh, it's definitely not a crash yet. This is relatively insignificant right now. It doesn't mean anything yet. This is a very small drop. We're still over 21K. If you look at a yearly chart, we're doing fine. We've kind of stagnated though in markets here. So we have kind of stagnated in markets somewhat, but V-shaped recovery maybe. Sometimes the first move is the wrong move, but this is a big move. And again, I've told you guys this before. And again, if you want to tune into somebody that actually knows what they're talking about, watch this live stream. I'm not trying to toot my own horn or brag. I'm trying to tell you guys. I told you guys, good is bad and bad is good scenario, except for inflation data. If inflation data shows up high, market's going down, and that's precisely what we got. Inflation data showed up high. We said 3%, market's going down. Now, it's a difficult one to predict, and I think there's a lot of nuance in markets right now that influences direction, but we are absolutely in a period of time where the market fears inflation. This is really stamping, reinforcing that the market fears inflation right now is what this means. And so what this means, guys, in terms of economic data coming out over the next month or two, it means that anything that could signal higher inflation is probably going to make the market go down. And that includes unemployment, right? Low unemployment might make the market panic. High payrolls might make the market panic. High GDP numbers might not make the market go up. I'm not going to say it might make the market panic, but things that mean more spending, bad. All right, things that mean more spending, bad right now, in my opinion, in markets. This is a big drop for CPI. It really is. We're still not crashing or correcting yet, but this is a big drop for CPI. This is not a small reaction. This is a big reaction relative to what we get, and justifiably so, with month-over-month inflation showing 0.5%, which is obviously pretty high. So just be careful, guys, out there today. Be careful. I was super confident in your prediction and it paid off big time. Thank you, sir. I don't want you guys to copy me. I know I've gotten most of the CPI reports, at least the direction, right? Whether we're going to be higher or lower than expected. I've gotten at this point, it's 8 out of 10 in the last 10 reports. I really have, which is kind of crazy. But it goes to show you, if you kind of follow the economy and know what you're talking about and have some common sense, you can kind of make some easy predictions. But with that said, as much as I'd like to brag, I think a lot of it is just luck. I think I'm just getting lucky. Where did Bitcoin go on this report? Bitcoin down to 94s on this report. Look at Bitcoin dropping here. I'm going to put the Bitcoin chart up in the middle. All right, guys, we're at 94.38. Again, looking at our poll number, 60% think inflation is going to get worse over the next 3 months. 40% think better over the next 3 months. And again, stick around. We are going to be trading live at the opening bell. We also have Jerome Powell today in the semi-annual monetary policy report. So Jerome Powell at 10 a.m. We're going to stream the whole thing live as we always do. Be ready, chat. Just be ready here. All right. Be ready. Big day. A lot of economic stuff. They say when trading you need an edge. I think I found my edge in your predictions or top stuff. Hey, thank you, man. I don't try to I just go with logic, but somehow I've gotten a lot of them right. But again, I really was the least confident today. I thought both sides made sense. I mean, I kept with my 3% prediction and we showed up at 3%, but I was wrong about month over month. Month over month showed up at 0.5. It was still the direction I thought, which was higher, but it was even higher than I thought it would be, which obviously is not good. Bitcoin down to 94s, gold down to 28s, SPY down to under 600s here on this report, chat, under 600s. So, do I wear dentures? These teeth right here? No, these are my actual teeth. I'm actually missing a tooth back here. You can't see it, but top 3 teeth in the world right now. Is a 0.1% rise that bad? Well, it's versus what we expected. expected was baked in, and so when we show up outside of the expected by a margin like this, it's going to make the market react. And so last time makes sense. Last time was 0.4%. Today we showed up at 0.5%, but it wasn't about it wasn't the net change. It was versus expected number, which was baked in already, causing this big reaction to CPI. You're from LA, that makes sense. What, that I'm missing a tooth? Honestly, I'm missing a back molar. I just haven't gotten it fixed yet. I had a root canal done, and then my wife kept telling me root canals were bad, and so I ended up getting the root canal moved and just extracting the tooth. And then I just never got it's in the back of my mouth. You can't even see it if I smile, so it doesn't matter. AMD almost back up to 110. It's almost everything down in markets right now. Yeah, I got to remember the micros too. Is the data bad? Yes. Yeah, again, I'm guessing the Fed Now tool was going to be... I'm guessing that we're going to be higher than expected. Yeah, so it was 95.5 about 20 minutes ago. Look at it now. It's now at 97.5, 98 to 2 now, basically. So this has changed a lot as well. Understandably so. I mean, high inflation is high inflation. You know, so this shot up. I think by the end of it, it'll be 99 to 1 like last time, where it's overwhelmingly expected that we're going to cut rates. Overwhelmingly expected that we're going to cut is my guess here. So, yeah, markets are not liking this. All right, guys. So yeah, inflation data higher than expected here, Chad. Higher.
Let's go.
All right, guys. So again, inflation data. All right, so we are also posting some news releases on our X page. Drum Powell speaks at 10. Yeah, I mean, I agreed. I don't think we should cut rates. John, please make me understand why people are selling because of inflation when we are investing just because we do not want to lose money to inflation. I simply do not get it. Because you're looking at short-term reactions. Okay, the market tends to fear inflation right now. The market wants lower rates because this is why. Market wants lower rates. If we have lower rates, people have cheaper access to money, and then they can invest and do all this different stuff with it. All right, as well as yields and interest rates tend to follow each other. But if interest rates are low, bond prices are high, and that makes stock prices more attractive. Is another correlation that you might want to understand. But this is short term, right? So this is short term reaction. We're hedging against long term inflation, meaning regardless of any small time reaction like this, the S&P, the NASDAQ, the Dow is going to average 8 to 10% a year. At least that's roughly what it's averaged over the last century. And it's probably going to average that as well. And so we hedge against inflation long-term investing. Short-term moves like this are insignificant for the most part. The market's short-term reacting like this because this means it's less likely for us to cut interest rates anytime soon. But again, to understand it, yields and interest rates follow each other. And so if yields are lower, if interest rates are expected to be higher to curb inflation, that means yields are going to be higher and the bond prices are going to be lower. making the underlying bonds more attractive than stocks. And so we're going to see a negative reaction in stocks because of that correlation as well. It's nuanced. You just got to understand the correlations. Easiest way to put it is that bond prices and yields inverse each other. So if bond prices are up, yields are down, and vice versa. And then yields and interest rates follow each other, have a positive or parallel to each other. So if yields are higher, interest rates are probably going to be higher, and vice versa. And if yields are lower, interest rates are probably going to be lower, and vice versa. And the underlying bonds are going to be higher. If all that makes sense. It's hard to explain, but you know, that's the correlation that you'll understand a lot of different stuff in finance if you understand that those three basic correlations. Interest rates and yields follow each other. Yields and bond prices inverse each other, and bond prices and stock prices also inverse each other. Right? Once you understand those three correlation, everything else starts to make sense. All right, guys. We got about 40 minutes until the market opens, and then at 10 a.m. we got Jerome Powell, Big Papa, speaking here. Yeah, this is a massive CPI inflation report. Way worse than expected. Market obviously doesn't like it. And again, stick around, guys. We are going to be streaming Jerome Powell. Later on at 10 a.m., we're streaming Jerome Powell's speech. House testimony is what it is, really. So, 10 a.m. Yeah, we try. Days like today are the reason the market doesn't yield more than the historic percentage average. Yeah, 100%. Well, I mean, we gotta. I always explain it like this: is that long term, the S&P, the Nasdaq, and the Dow are going to average about 8 to 10% a year, and that includes crashes. And so, on good years, to compensate for the crashes, we're usually going to have really good years, like last year, the year before, where we averaged 100% in 2 years in the Nasdaq. And bad years are going to be bad, and because they're all, it's a balancing act to get that 8 to 10% a year in indices. So yeah, again, y'all click that Discord link, check it out. Tell me if that Discord link works right there. If it does work, let me know. We're trying it out. Join our Discord. Great way to help support your boy here in this channel. Sorry, Pawn, I haven't even pulled up Discord today, dude. My bad. But inflation data, worse than expected. Worse than expected. Yeah, so for the Topstep news people are talking about, they said that some people were like going crazy big size on news and trying to get payouts from like the crazy risks they were taking on news. They're trying to kind of game the system a little bit, and that they've already reached out to the traders involved. And so that's kind of what's going on. All right, guys. And again, stick around. We're going to stream Jerome Powell too. All right, guys, market's still testing these lows here. If inflation stays high, does that mean good news for gold prices? Well, gold's a little bit of a different animal. Gold can kind of move in a macro sense with markets, but it can also move long-term against markets as well. It's a little bit different of a correlation to watch. Gold long-term moves up, but it can downtrend for a decade as well. So it's just a different animal versus macro markets. Did the link work, guys? It doesn't look like it did. We only got one person join the link, guys. Hey, join our Discord. It's completely free. It doesn't cost anything. We got a great community of people around here, guys. So join this link. Again, completely free Discord. Doesn't cost anything. If you want to reach out, that's the link to do it. And, great way to help support your boy here in this channel. There's the Discord link right there. GameStop rumored to be starting a BTC reserve. %99.5%. Hey, did I not say it would be at 99%? I mean, that's pretty predictable. You know, like high inflation data showing up is pretty indicative of 99 to 1, right? And this is exactly what I said it would be. So not a shock. I mean, pretty predictable. Yeah, there's some joins on the Discord. Weird. All right, guys. Whew. Again, if you haven't already, check out Topstep. We are going to day trade on Topstep's funded account program today. We had a great day yesterday. This is Topstep right here. If you use my link, you get 0 commission on Topstep X. So if you go through, remember, if you want the 0 commission, you got to use Topstep X is what I'm trying to say. No PDT rule. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stock patterns. It's just a souped up demo account. They give you a demo, test your skill with the said demo. If you pass the test, the base one, which is $49 a month, you got to make $3K without losing $2K. And you want to confirm all this with them. If you pass the test, they get $50K in funding with a 90% split. Similar to funding your own account, risk is noticeably less than losing 10, 20, 30 grand funding your own account. No PDT in futures, great way to get around the PDT rule, and most pro day traders trade futures. Patterns are very similar to blue chip stock patterns as well, and if you watch me day trade today, you'll kind of see that. And so again, if you want to check them out, they've paid out almost $200 million. Again, though, they're an affiliate of mine. I am biased because I get paid by them. You want to confirm all this stuff with them. I can't guarantee anything. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Don't copy me. I have no idea what I'm talking about. But if you want to check them out, the link is in the chat right now. There's the link right there. All right. All right, guys, we got Powell today with the house. Yeah, so we do have Powell today with the house, guys. Y'all be ready. And yeah, we're going to stream that live, so don't worry. Don't go anywhere. We're going to stream it all live like we always do. Powell's at 10 a.m. Yeah, I think the easiest way to understand markets is you can't be definitive, right? The biggest problem I have with gurus, especially like if you see people that are hypercritical in chat, right? Like one of the biggest mistakes that they make is that profitable traders don't behave that way. And the reason profitable traders don't like sit around like attacking and critiquing other traders is because profitable traders understand variance. Nobody knows if somebody's right or wrong about any trade idea. In fact, it's been really funny when I've been on big streams and I enter a position and they're like, oh, that trade sucks. That short sucks. That long sucks. And then like 5 or 10 minutes later, it's just ripping up in my favor. And then the same people that are talking so like ridiculous about it, crickets, silence. And so one thing experienced traders recognize is variance. And so nobody freaking knows. And so attacking people and critiquing people for their trades or whatever that you don't even know if it's going to be a good or bad trade is something that's like a rookie thing to do. It's kind of like it's something that comes from a lack of understanding of variance. And you know, day trading is full of variance. Like it's super variance heavy. It's why Topstep is useful. Almost all day traders freaking lose. And that's probably the same here. I think most day traders are going to lose regardless of where they go, but it's frankly cheaper to try on Topstep and lose than to fund 5, 10, 20, 30 grand and lose that most of the time. CPI was higher than expected at 3% year over year. We don't know. Push. He says, does today's inflation and CPI report make gold climb? No idea. Genuinely no idea. Remember, Powell speaks live today. Yeah, it was very high. I'll watch you trade because you are better at trading ranges than I am. Well, I mean, top 3 range trader ever. I mean, that's kind of how it goes. But I'm definitely top 3 worst ever. Yeah, for sure, Aaron George, 100%. Right, exactly. Like, I was a poker player before I invested and traded. Very, very similar. Very, very similar. Like, you bet on probabilities. Variance can always happen. It might be a great trade and I can still lose. It might be a terrible trade and I can still win. I might have pocket aces and lose to 2-7. I might have 2-7 and beat pocket aces. You know, variance is real. It's how it goes. It's very similar to the stock market and finance and futures trading. Very similar. So you just want to bet on good probabilities, but always understand it could go the other way. Try to get good risk reward, just like pot odds and poker. You know, very similar. Well, I mean, the logic of these levels don't mean it. This is very important to understand, is that fundamental catalysts trump technicals by a large margin, right? And so no matter how good these levels are, if we get a big economic catalyst like CPI showing up hot, the market's going to tank, most likely, regardless of how good these levels are. Now, you can kind of see it did stop at this level. Like, this level was on our chart prior. It did stop there. It's been confirming this level a little bit. But again, I always try to tell people the same thing. You get technical wizards that are trying to act like they get really bad when they start trying to act like this is a technical move. You know, sometimes they will pretend this is a technical move. I've seen them in the chat being like, yeah, guys, see, I called the rejection of the non-EMA, and now the market did this. And I had to be like, hey, the market's down because of CPI. It's not the 9 EMA rejection. It's down because of CPI. Like, don't overvalue technicals in terms of catalyst, because if a catalyst comes out better or worse like this, it's going to cancel out a lot of technicals. And so understand the hierarchy regarding these things, I guess, is the best way to put it. Yeah, catalysts just destroy technicals. Yeah, losing's important. Yeah, Nasdaq's down, SPY's down, Bitcoin's down, gold is coming back. Gold is actually very green on this report. So gold is good because gold is a long-term inflation hedge, and so will you now build levels off of the post-catalyst data? Yes. I mean, I'll always build levels. You know, this level is confirmed, this bottom level at 535 or so. But yeah, if we confirm other levels, we'll build them. You know. If the market comes, we will build, is what I'm saying. No, I mean, it's definitely a negative reaction, but it's small compared to long-term price action. It's not like we're crashing or correcting yet. Nothing's happened yet, really. How are Rolexes performing right now? Well, they're weak for sure. Not really a shock. They've been stable since, you know, they're down a little bit since the year, but this year, I mean, they've already been pulling back. They're correcting still from 2020. I trade on these days. I definitely don't trade while this is going on. So I'm going to trade today, but I definitely don't trade while it's going on, if that makes sense. So, and again, guys, we're gonna do a Jerome Powell stream. We're gonna pivot to our Jerome Powell stream. And so stick around. We are gonna be streaming Jerome Powell live as we do. If it doesn't bring you there for whatever reason, we're going to redirect in about 2 minutes. If it doesn't bring you there for whatever reason, go to the stream, here is the house testimony stream that we're going to be doing. And so if it doesn't, and we're also going to trade live. We're also going to trade live. So if it doesn't bring you there for whatever reason, there's the link. But again, we're going to redirect it. So as soon as we close this stream down, we're immediately going to redirect to the stream that we're going to trade the open on, as well as stream the house testimony by Jerome Powell, the Jerome Powell house testimony. And so if it doesn't bring you there, there's the link. And yeah, let me make sure we're redirecting as we should be to the house testimony. Yep, we are. Okay, good. Let's make sure this is set. Yep, we're good there. Yep. All right, guys. So again, we're going to close this stream down, immediately pivot everybody to the new day trading live at the opening bell house testimony stream. So again, don't go anywhere. I'll see you guys over there. And again, if it doesn't bring you there for whatever reason, here is the link to that stream one more time. There's the link right there. I'll see you guys over there. Let me know if it works once we get there too, but I'll see you guys over there.